This is not financial advice. I am not a financial advisor. Before taking any action based on the information provided on this channel, it is recommended that you seek the advice of a professional licensed financial advisor.
Let's do this.
Hey everyone, welcome to the Tech YouTube channel where we do technical analysis quickly, hence the acronym. I just wanted to jump into the charts. Today is August 9th, it's about 3:54 p.m. and this is the Bitcoin chart. I do things a little differently than all the people I've been seeing online, and I just want to help set the foundation of what it is I do here and what that's going to look like. So in the future when I'm posting videos, they come out quickly and to the point, and a video might last 3 minutes, 5 minutes, just giving you an idea if there's been a major change in the market, and not to freak out, or definitely to freak out, whatever. But as the intro suggests, this is not financial advice. I'm just letting you know this is what I do as I'm jumping in and jumping out. I'm telling you what I'm doing. If you decide to copy me, just please do it safely. Know what you're doing. Obviously the whole seek help from a financial advisor, all that jazz disclaimer. But if you're here to learn and add this to your tool chest of doing your own research, I'm happy to help. So if we turn this back off, I'm a big into wedge trading. Like the three things that I use the most are wedge trading, and then the Ichimoku Cloud and the Bollinger Bands. Without the Ichimoku Cloud, which I cannot believe how many people don't use that. Without that, I don't know how anybody's trading at all. I mean, at that point, it's just straight up gambling. But for me, when I got into the wedge trading, I also do it in a way that most people do not. So let me explain this. So if I clear this chart, I can start to give you an idea of what I do here. This is the daily chart. Okay, so as you see this thing now, it's quite easy to draw a wedge. Okay, from the place that it changes direction, you go up and then you change direction again. So this is the first hit, the second hit, now we've got the third hit. But you can see here, as this thing was unfolding, you would actually think that, let me back this up. You would actually think that this was the low. So then, as you were drawing this to begin with, you would have it somewhere in here, and you would be anticipating this going back up. Now you have other tools like the Ichimoku Cloud that are going to give you an idea of where it's going, or even the RSI for that matter, once you've stared at it long enough. But you wouldn't know as this continues that you actually have a new low. So then as this develops this way, you would actually move this down. So now this becomes your second hit. So now you keep going and you see your third hit. It doesn't quite make a new high. So here it doesn't make a new high. And now we're all caught up. So this is on the daily, but obviously you can shrink this down even more. So if we jump to, for instance, the 4-hour chart, you can see these smaller downward wedges. So you can draw one like that, you can draw one like that, and these work as a general rule. They work in 4 and then breakout. So hit, 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 hit. That's 4. Breakout. Okay, let's pick another one. And you got to include the wick. That's what a lot of people don't do. To me, it's absolutely imperative. And it's basically down to a mathematic, like a science here. It's that surgical in how it operates. Like it just misses this red candle here, but it'll catch the green candle. And you see how my line is off the green candle. So, as I'm sitting here preaching about it being surgical, somebody might be like, well, how the hell is that surgical if you're not even on it? Well, let me show you how. Because then when you zoom in and you put it on there, you miss, you hit. It's surgical. So you hit here, but you miss that one. And sometimes it might even look like 2 are hitting, but then you drop down to the 1-hour chart and you can see it even more finitely that you're missing it. Or maybe the 1-hour chart is where it seems like it's hitting more and you've got to zoom out a bit to see which one is really hitting it. But even here, as I zoom in, you can see we got a hit and a miss. So you do enough zooming and you can see what I'm talking about. So then you can get an idea of where it's going. So then what the hell happened here? Well, the answer to that is over here. This is the chart that I use on a regular basis, okay? Whoops, let me get rid of that. So we came down, let me switch to a lower time frame, we'll go 4 hour. We came down to this. So we had a hit up here, then we came down and we hit here, then we came up, hit there, came down, hit here, that's 4, and breakout. Okay, let me see if I can clear some of this stuff up, turn off my cloud and so on. Okay, I turned off the Ichimoku Cloud and the Bollinger Bands, so now it's just the candles. And the reason why I do them transparent like this is because then I can see the lines going through them, and it helps me just get a better view, but I understand it might not be as conducive for video, so if you guys don't like that, just let me know in the comments and I can switch them over to a solid. It's simple how you do that. If you guys are using TradingView, just click on the candle, hit body, and then you've got candles. For now, I can leave it like this. So once you had your breakout here, you began a new wedge. Now, I've got this white one that's laying over the orange, but it's the orange one I want to focus on right now. So you change directions here. First hit, second hit, third hit, fourth hit, breakout. So you could see this breakout coming. You could see this last minute run up coming. And to be perfectly honest with you, I thought this was going to come down hard. Because if we zoom out here, you actually have upward broadening yellow wedge, which means we're going to be making a move at some point here down out through this upward narrowing red wedge, say that 3 times fast, and then break out of the yellow. So I thought, I mean, anytime it moves, it's going to do this. I mean, it's like a snake, right? It's not just going to move straight. That doesn't happen. So at the end of the day, there's going to be zigzagging. So it's not like I thought it was just going to just straight down, but while this zigzags, you know, it's much more in a straight line pattern than this. It was just, it started to come up. So now I think we're getting into this much broader version, you know, and then this blue line will eventually break up. If that's even what happens, I don't know if that happens. But what I mean is, when I said that I thought it was going to come crashing down, it's because we have this upward narrowing within an upward broadening, and it was its time. The Ichimoku Cloud, which you'll see more about in a bit here, all of these things were indicating Bitcoin's got to go. Now, if it had come down hard like this and then bounced up here off of the yellow before it then came back down through the yellow, you know, that would have been perfectly understandable. But this whole leg, I did not see coming when we were up here. I thought this was the big turnaround. I had to see it coming by listening to the charts instead of, you know, the nonsense that was all over YouTube and the hype and, you know, we're $30,000 in the next 2 weeks and then we're heading right back up to all-time highs. And no, we're not. Okay, not yet anyway. I'm not bearish on Bitcoin in the macro. I am in the micro though. So it's not like I'm anti-Bitcoin or anti-crypto. I hope that's blatantly freaking obvious. But my point is, you have to listen to the charts. You can think you know something, you can hear something on the news, you've been all over Twitter, yada, yada, yada. But unless you're listening to the charts, you have no idea what the hell's going on. So once I got my 4, I'm like, oh shit, you know, this thing is going to take off and go the other direction. That's exactly what happened. And then once I saw that it started to slow down and peak out here, and there's lots of other tools, which I'll get to here in a minute, you could tell that it was going to come down. Now, it's sputtering. And the way that you can tell it's sputtering is you now have a symmetrical wedge, which is this white wedge, okay? So you came down and hit this, then you went, so you came into this symmetrical wedge down. So now you're going up, break down, and out, okay? Because when you come down into a symmetrical wedge, which is just a sideways narrowing, or you can flip it and it's a sideways broadening, it's where the upper bar goes the opposite direction as the lower bar. So they cross here at the end. See here, Bulkowski calls it a symmetrical triangle. So he's got it coming up and then dropping in and then So he's actually saying it came in up. And realistically, even if you move this line over to that one, it would come up, hit there first, then here, then up, Again, even with how Bukowski does it, I don't do it the same way. And I'm not trying to claim accolades above his. All I'm saying is when you start using it this way, well, these rules apply. But when you start using it this way, it's really a science. See, these he calls broadening tops, but they're just a symmetrical triangle or symmetrical wedge or whatever the hell you want to call it, the opposite way. So this one breaks in up and then does the same thing backwards and then breaks up again. So the general rule is how they come in, they go out. And the higher you are on the time frames, you get into the 4-hour, 8-hour, 10-hour, 12-hour daily, whatever, you go up that high, and it's not all the time, but it's the vast majority of the time you'll see these things break out the way that they came in. When you get down in the 30-minute ones or something, you're looking at that, it's anybody's guess. And you can kind of tell a little bit more when you're looking at the Ichimoku Cloud and the Bollinger Bands as to which direction you think it's going to break. Volume is an indicator, RSI, and so on. You'll have an idea, but you want to be in the higher time frames to have a better idea of what's actually going on. So back in the charts, you can see how we followed this the entire way. So now I'm going to touch on the next tool that I use, which is extremely important to me. And that's over here. It's the Bollinger Band. I'll do that one first. Okay, the Bollinger Band is giving you, the exact science of how the Bollinger Band is set up and the algorithms that go into making it true and what moving averages is using and all that stuff. You can do your own research on that crap. You don't need me for that. I'm just going to show you real world practical usage of how this is, okay? You have the chart will have to stay within the Bollinger Bands as a general rule. And you can see this band, it's like a sausage skin essentially that it stays within. An intestinal tract, if you will, whatever analogy you want to use. And you can see that it's moving up. And then as it goes up higher and higher and higher here, it starts breaking outside of the Bollinger Band, because you can see that running here. Now I'm going to turn these candles transparent again so you can see it running behind. You can see it's way down in here. So if it breaks too far out, it gets pulled back in. If it breaks too far out, it gets pulled back in. And then now it's tried to pull out too many times and it loses momentum and it comes crashing down. So now we're, in a new wedge, and you've got the Bollinger Bands to help you because, here it bottoms out, here it bottoms out, here it comes way out and then bottoms out and then goes the other direction. But it's just a tool. It is not your only tool. And there is no one singular tool that is going to do this for you. Certainly that's my opinion anyway. And you can see too that they get really fat here and then they start to narrow out. This is the explosion up, which creates this fat ball essentially. And then as it starts to narrow down, now its pressure's building is a way to look at it. So you might get some, bouncing back and forth. You can make some small trades in here. It's not garbage, but it's nothing exceptional. And then it gets even narrower here. It's about the same as there, but you see it get narrow again, and then boom, you get an explosion outside the band. And it gets rejected, and now it's coming down. To give you some terminology, this is my terms, I've never heard anybody else say this. If this comes down from out here on the 4-hour, because this is the 4-hour chart, and then comes down to touch the outside skin here, I call that a 4-hour reset. It means we've now flipped all the way down to the bottom Bollinger Band from the top, or to the top from the bottom, whichever one it is. And you'll have less and less and less of those the higher up you are in the charts. So we've got bottom, top, bottom. And that all happened since August 4th. Okay. If we switch to the daily, you've got, this doesn't even touch. So you've got top. It's at top again. It's at top again. It hasn't even come down. So the last time it was on a bottom on the Bollinger Band on the daily was when it hit 17,000. So June 18th. So you can see it's a lot less frequent. And like I said, this one just missed. So now, my personal favorite, I don't know how anybody trades without it, and that's the Ichimoku Cloud. And there's a bunch of different components to it. You can learn about the actual names of each one of the lines and so on. And I can break that down here 10 seconds or less, essentially. So let me turn it on right here. And I only use the Tenkin and the Kijin, okay? So like I said, there's 4 components. But the Tenkin is the green line here. Usually it's blue. I've turned it green. And then the Kijin is the red line. When the green line is over in this case, the green line, which is usually blue, is over the red line, it's more bullish. And you can see that here. We came crashing down with the green under the red, and then it flips over and starts going up the other way. Now I understand that there was also a bullish move here while the green isn't over the red. So if you just trade when the green crosses the red, you'll make money. It's just you leave a lot of money on the table. So I don't recommend that. Like I said, this is just a tool. It is not your only tool. And then when these lines separate and you get all this space between them like you have here, all up in here. I mean, it's smaller here. It's a little bit bigger here, but this is massive. And that's just because this meltdown here was so big that that's what you got. And that leads you, it's giving you an indication here that this is going to be pulling these candles back into this open space. Like it's easier to see when it's separated here, right? And I'm going to back up the charts so you can see what I'm talking about. If I start it here, you can see that the green and the red are together. So this is a bullish indicator. A massive green candle is going to tell you, duh. So let's jump forward a bit. And they're going up together nicely. And then they dog ear. As soon as they dog ear, that means that it's going to start pulling towards. But another indicator, an even stronger one, is when the mouth, as I described it, starts to open. If you think of a whale's mouth, when it moves into a school of fish and just sucks them all inside the mouth, this is what's happening here. It's moving, it's opening its mouth, and it's going to pull these things down into it harder. And it goes up again here, right there, that little run up. That is an even further indicator. While the red holds strong, this one goes up, the mouth is opening more, and then you got an even bigger candle. Okay, it doesn't always work exactly that way. Sometimes it almost seems like the candle's getting hung up here on the upper line, and that can happen with the lower line as well. But then we'll continue this playing out. And now you can see this giant candle take off. Now, on the daily, because it's wide here, and it's already gone all the way through, you would expect some narrowing to occur. That would be normal. That didn't happen here. But because you have different time frames, what was going on is on the 12-hour, you could see that it was really wide here as it came in, as it's pulled these candles back down into the the whale mouth, so to speak, like I was talking about earlier. And now you've got the green and the red coming close together. Now, it came down so far that the red switched over the green here. But it didn't last long. It took off. So it's kind of giving you an idea that it's either going, well, I mean, this sounds silly. It's either going to go down or up. Yeah, no shit. But I'm saying it's either going, it was slowing down enough to where when the red popped over the green, that's hitting the brakes. So it's going to start to tell you something more. Now, here, we also see that it hit here, hit here, hit here, and hit here. That's 4. So now we got a breakout. And because a downward broadening wedge is a bullish signal, that breakout is going to be up. Now, it could have been, like this. It could have worked its little way over and kind of gone up like that. Instead, it just shot up, and that's what you got. So you can't know exactly how it's going to go. Obviously, there's no crystal ball. But once this shot up like this, I knew that we were going to be, the green was going to flip over the red here pretty quickly. So let's watch that play out. Yeah, within 2 candles, so 24 hours, because this is a 12-hour chart, it flipped over. Now, I'd also like to take a second here to mention this. if you zoom in here, this is the Bollinger Band, okay? I have never seen a 12-hour, or any really, for that matter, that's not fair. On the higher one, so yeah, 8-hour, 12-hour, even arguably getting into the 4 and 6 hours, right, on the charts. I've never seen it get this close without doing the reset. So if you were only watching the Bollinger Band and you put your buy-in right there and then just went about your day, you'd have missed it. So you don't want to get too greedy like that. You're going to want to, put in a buy-in somewhere in here so that when it comes in, you can get it. Because another thing, like with executing, if you put, a limit order in on CoinEx or wherever, as it comes down, you want to put it in here because people will be selling at certain points. And if there's not enough that you're buying here, you'll never get it in, you'll never execute, and you'll miss the whole thing, which you obviously wouldn't want to do. So don't get too greedy. Be prepared to leave pennies and dollars on the table. The goal is to not leave thousands of dollars on the table, or even hundreds of dollars for that matter, because it's unnecessary as you start to see how these things play out. Anyway, I'm going to continue with the cloud as we move up here. So you can see the green and the red, they're on top of each other. Now, this is still a very bullish signal in the sense that they're close together. So there's no whale mouth, it's not pulling it back in, and so on. What you also will notice is that here you're outside of the Bollinger Band. So it's nothing like this that's going on over here, but you are outside of it. So it'll just kind of create it's a little pressure. It's nothing significant, but it's something else to look at. I mean, it's not out of here like that. But this, these lines being close together here, the red and the green, these are indicating that's a good sign because they're not opening like, the whale mouth like I described, okay? But they jotted right. So now you've got essentially this giant jump up, and now it's coming back down to the platform. It's not the same as it opening, but it is a bearish signal. It's indicating a pullback. This was indicating a pullback, so this is turning right is indicating a pullback. And you'll learn to look at all of them as they come together, okay? Plus, you would have also drawn a wedge here. You would have shrunk it down so you could, as you go to the lower time frame, sometimes you can see the wedge better. Where are we going here? I may need to drop down even further. Not sure what we got. I'm just going to throw some lines up real quick and see what I'm working with. So we've got change in direction, hit. We need a hit here. So 1, 2, 3, 4, and break down. Okay, something like that. Let me let it play out a little bit more. Go back to the 12-hour. But I'm saying those will also tell you, as if they're an upward, narrowing wedge, you're going to see the pressure build, and then it's got to break. So let's keep going. Okay, so this is the weird one that doesn't really fit. You can see this that I've got, put together already as it unfolds. But as these lines, as I was talking about here with the Ichimoku Cloud, the lines here are really close together, and it's not really pulling it down. It just sort of ran out of momentum. And then, as it gets over in here, you start to see the mouth open. Now, that's barely open. But even that was enough to start to pull this down. Then it opens even more, and then it pulls it inside the mouth. So, same concept. Continue. Okay, so now we've broken. So you got 1 hit, 2 hit, 3 hit, 4 hits, and then now 5, it's breaking out. Now here's the new orange wedge. But the whole time you can see what's going on with the cloud. So we got wide, then we started to narrow, which means something is going to pop. It's either going to go down or it's going to go up. You can also see the Bollinger Bands are getting narrow here. So then it's going to switch into something that's skinnier like that. So now it's bouncing around the orange. Okay, and now we're caught up. So now you can see 1, 2, 3, 4, and then the 5th is out. Yeah, there we go. It's hard to see this orange line here because the white line's over it. Plus, you know, you're looking at more than that. I'm looking at the fact that we've got a giant symmetrical wedge. I'm looking at the fact that we have an upward broadening wedge. I'm looking at what the Ichimoku Cloud is doing. And now you've got the green crossing over the red here. I'm looking at the Bollinger Bands as they're getting narrower and pressure is building. I'm looking at the fact right here, you can see that the candles broke out of the Bollinger Band up there, indicating that it's going to, like a elasticity, it's going to sling it back down. Now, it might only sling it down here before it goes up again, but you know it's going to be slinging it down. So as you're looking at all of this stuff, and then even zooming out further, you've got the red upward narrowing wedge here inside the upward broadening wedge. All of these are bearish signals, okay, because this is going to break down and this is going to break down. And the orange one that we're in here, we broke down. They're all indicating that we're coming down. And then if you look further here, I think that this is going to develop into this blue downward broadening wedge. So let me turn these indicators off. I've watched this already now. I don't need those anymore. I'll explain those at a later date when they actually mean something as it's unfolding, because my plan is to put out these daily videos that are, you know, like I said, 5 minutes long, explaining what's going on for the day, and don't worry about it, or, you know, panic or whatever the hell it is. But I'm only going to be reading the charts. If you want to follow what dumb shit Elon Musk said on Twitter or whatever, I'm not betting on that. I'm not talking about what the Fed's doing. I'm not talking about, you know, inflation. I'm not talking about the job numbers. I'm not talking about whatever Apple just did. This, you know, and I have no problem covering Apple. If one of you guys want me to talk about what's going on in Apple's charts from a technical analysis standpoint, that's fine. But I'm saying, you know, if they end up pulling out of China and switching over to Taiwan for their manufacturing, and what kind of effect is that going to have on global chip manufacturing and so on and so forth, and how does that spill down into crypto? I have no fucking idea, and I'm not going to pretend like I do. But I'm going to tell you what's going on in the charts, okay? Continuing. This blue wedge, so you can see we have a hit here, change of direction, then we've got a hit here, then we've got a hit here, and I think this is going to work its happy-ass way down, all the way down to the blue line. There's a good chance that it could move around to the point where you're actually going to take this blue line off. This will become the first hit. Whoa, this is super long. You know what? I'm just going to draw a new one. So this will become the first hit, and it'll come down like this. And then this will be more like this. So then we've actually got, let's see, hit number 1. Yeah, that'll be hit number 1. So we don't even have technically hit number 2, because 2 has to follow 1, and this preceded 1. So we would actually be moving this down to wherever it hits. So let's say that this comes down like this, hits there, and then kind of bounces up and hits there, and then kind of comes down again. So there's 4, and then your breakout 5 will be way over here. Yeah, that's probably more likely. And if you're wondering why you would have this be hit number 1 rather than the change of direction over here, well, the same question can go for, what about this one? This was a change of direction. Technically, this is the last hit off the outermost wedge, right? Because this is a hit on the red wedge. This is a hit on this new blue wedge, or even the orange wedge, if you want to call it. It's not this outer wedge. So when you zoom out, and I think it's this way on the weekly chart for Bitcoin. It's not weekly. Weekly. Oh, okay, it's not that way on the weekly chart. I was thinking that the weekly chart was one, where it actually pulled an outer one instead of the first one, but this is the top where it changes direction, so that doesn't count. Forget I said that. But it does happen that you end up choosing this one instead of that one to form a wedge that actually functions. And a lot of it is because it just hasn't made up its mind yet. You know, it's hitting it here, and then it comes down, but then it goes up and actually peaks out even higher than that. So that one's already out. This one becomes the new highest most one, and then it could possibly come off of that one. So we'll know. I mean, this blue wedge is complete and total absolute speculation at this point. I guess that's my point. What I am seeing, and what I did predict, is that this was going to stop there and break out. Now, let's look at a couple more tools, okay? The Stochastic Slow and the RSI. This is usually what I'm looking at. When the stochastic breaks over these numbers here, it'll highlight red, which means sell. When it comes down here, it'll highlight blue, which was a buying opportunity. It doesn't mean do it, because again, it is just a tool. It is not the tool. You've got to look at everything that's going on. But you can see up here where it broke out of the Bollinger Band and now it's turned around and come down for 3 consecutive 12-hour candles, boom, you broke out. So if you were just operating on this one, you'd have sold or shorted, well, both. And then as it comes down here and breaks out the bottom, you'll make another decision. But you can see over here, for instance, all of this blue, I mean, it was down here for a while. So if when it broke in, you decided to buy, where does that even line up with? Like way up here, you'd have bought up here, you'd still be in the hole. So, but you wouldn't have bought here if you were looking at the cloud, because the green and the red are right by each other. It hasn't even begun to start to open yet. And the momentum is significant. And you would have also been looking at multiple charts to get a better idea. So like, let's jump to the daily like I just did here. So now we're talking about lining up with this blue. So these are close together. This is not indicating that there's pulling apart, that it's going to pull back up. Now I understand that when this one here shot way outside the Bollinger Band, the green pulled it back in. That happens all the time because it's just got to pull it in. It doesn't mean it's stopping the momentum. So you could kind of take this to be the first break and slowed it down a bit. And now this is the second break. And then the third break. This is just digging your heels in. And then finally was enough to turn the vehicle around, so to speak, I guess, to run with that analogy. My analogies are going all over the frickin' place here. But you can also see that the Bollinger Bands are wide, indicating that it hasn't gotten to a point where it's going to calm the fuck down before it gets into this and then starts building a pressure again before its next big move. Here, you can see the big bands, and then it shoots down again. So how can you tell whether it's going to shoot down or it's going to go up? Well, a number of reasons. My bad. I'm zoomed way too far. What chart am I on? A daily? Okay, so the purple wedge is the big wedge. That's the one we've been traveling down since the $69,818 mark or whatever it is. So we've been coming down since. So we got a hit, we had a hit, and then this is where we were talking about. So it came down, and it was just going straight across. There was nowhere near enough momentum, volume. Nothing good was happening here. And as you zoom in on the cloud to see what's going on there, this got fat enough to slow it down and kind of pull it back in. Now, don't get me wrong. I think it was like a 25% move, if I remember. Yeah, 20% there, and then to its peak, 27%. There was money to be made there. But so much of it was in this wick. And then it just kind of continued over, and you could see it was running out of steam. You could see that it just got a little bullish here, but we only had this one spike. It was nothing special. It shot outside the Bollinger Band here, barely reached it again here, but that is the second time out. And, you know, since here we had one, then we had the daily reset. This does not count as a reset because it went from top to top, so that's not a reset. So now we were kind of getting due for another reset. So that's another thing to take into consideration. Now, I don't know what was going on the RSI that was telling us stuff at that point. Let me see. I would have to look at, because this is the RSI indicator here, and you can draw wedges with this as well. So I would have probably tried to figure out what's going on with the RSI. Okay, so yeah, you can see what's happening with the RSI here. So you would have drawn a wedge like this. There. So you had 1, 2, 3, 4, breakout. So you would have seen it was coming down. It just didn't have the momentum. So we probably have some divergence here too. No, we actually didn't have bearish divergence because you had a line here that goes down and a line here that goes down. So that's not divergence. But, I mean, again, you're looking at the wedge here. You're looking at the clouds doing nothing, really. You're looking at the fact that you're in a narrow straightaway with the Bollinger Bands. You're looking at the time difference between the resets. All that stuff is the stuff that I take into consideration. And then you've got the sell indicator here, which took place right at the peak. So granted, is it possible that this would have said sell here and that's all it meant? That's possible. I mean, technically you had a buy signal come in right at the bottom there. So if that's the case, you would have bought in here and you would have ridden this one up there before it went out the Bollinger Band. Now, you do not have a sell indicator there, but zooming really matters here because you can see a tiny little pop out from time to time. Here you don't have it. But that's so close to that line, if it had just crossed by a hair, you'd have red. So that's another sell indicator. So you had a lot of stuff that said sell. So I mean, it's harder to go back and spew this stuff out. It's easier, as it's unfolding and talking about it, because there's so many different reference points. Like I could talk all day about this, and then all day about this, and another video about that. So, and I don't want to take up all your time. I just wanted to give you guys an idea. This is what I do. So then I'm going to get into the charts on Bitcoin. If you want to see stuff like, Pirate, Monero, because I know a lot of Pirate people out there don't get a lot of love because everybody's talking about Bitcoin or, Luna before it tanked. And, I was a part of that one. I did not see that coming because, well, it was a first. So, yeah, unfortunately. So this is it for my intro video. If this is the stuff you guys like, thumbs up. Go ahead, leave me some comments below. Let me know if, you've seen other people doing similar things. Obviously, I'm not the first person to use the Cloud or a Bollinger Band or a Wedge Trading or anything like that. But I see people drawing wedges that blow my mind. Now, I'm not saying they don't work, and I'm not saying that they haven't made money doing them, but I don't understand why you would just, throw together. Let me do a whole new one here. Why you would just throw some wedge together like this. You're like, this is sort of, a wedge like kind of here, and they're cutting, oh my God, what is my computer doing? And they're cutting these things off. Like, why? Why is all of this stuff hanging out? And then, they'll call this like a fake out and a break back in. When in reality, if you would just move it to where it's supposed to go, it wouldn't be a fake out, nothing. There was no fake out, and I'm not saying that this particular, chart for Bitcoin they were talking about, I'm not saying that, but they draw these crazy things and then they, telling you to take action on them. And I just blows my mind. I mean, this is just clear as day. You draw it right to the tip, right there, and you got to zoom in a little bit to do the surgery necessary so that you don't leave any space. But that's perfect. And now you actually have that much space there. Not sort of, not, you're in here like this, so you think it's only that much space because you couldn't give a fuck about these when you should. Some people do that, and it's a lot more than you'd think. And I'm sure if you guys are out here watching crypto, you've seen it too. And I don't do any of that stuff. Volume indicator is another one that just came on when I started the new chart. That's another good one to use. I don't know if you noticed it or not, but I have it on at the top of my chart here. That's where I keep my volume because I don't use it that much. It does matter. I'm not saying it doesn't matter, but I don't use it nearly as much to where I want it all over my page here. But if this is, like I said, if this is the kind of stuff that you're into and you feel like this will help you make some decisions and so on in the market, keeping in mind that this is not financial advice. And I think I've been pretty easy on the swearing here. I can tell you there are going to be days when it's going to be worse than that. But if this is your thing, hit subscribe. I'll leave a comment. Like I said, I'm happy to take a look at whatever coin you're following, whatever project you're following, whatever company you're following. I called this the gas prices coming down. I knew wheat was going to tank. I can see this stuff coming a mile away just because, not because I'm smart. I'm not out here talking about, look how amazing I am. I'm just trying to say, you can see it in the charts. If you shut the fuck up, not you, if people just shut the fuck up and listen to the charts, they'll see it. I mean, it's not a crystal ball. It'll never be a crystal ball. Nobody's going to call every single move. Nobody's going to leave no pennies or dollars or whatever on the table. It's not going to happen, but you can hear what it's saying. So when the news is like panic or Bitcoin's hit a low, but you're sitting here staring at the fact, no, it hasn't. It hasn't hit a low. It can't have hit a low because you're looking at this yellow upward broadening wedge and you know damn well that this thing is going to break down. You know damn well this red is going to break down. If this blue is real, you know damn well this blue is going to break up. But this blue may not break up until, way down here, in which case it's going to hit this. Now it's possible this could be the low. It is possible. I think the RSI may have hit its all-time low. So let me jump over to this. Is this the weekly? Yeah, if you look at the lowest all-time RSI figure on the weekly is right there. It's 25.74, and we've hit it. We were lower than back here in 2018, lower than back here in 2015. This is the lowest RSI. So we could be at the lowest RSI, okay? But that being said, that doesn't mean that when the RSI comes down here, that this price isn't going to be even lower yet. So for instance, if this is the lowest price, maybe our price hits here, but our RSI, come on, give me zoom in. So this comes down like this and stops there, keeping our RSI at its lowest. Here's the price. Maybe our price is down here. Maybe our price is down here, but it's not reflected as much in the RSI. So then you've got a divergence line here versus here, which is a bullish indicator, and then it just takes off. This is not a 1-to-1 ratio between the RSI and the price. So, like I said, it's possible that we've hit a low. I don't think so. There's a lot of people out there that don't think so. Technically, $9,877-ish, let's just say 10 grand, is the 84% reset that it did after the last bull market. So right now we haven't even reset percentage-wise to where we were last time. So, I mean, even that is another big indicator. And, you know, people are always talking about this, or a lot of people are talking about the 20-week moving average. And we haven't been below the 20-week moving average that much. And I think I actually have it broken down better over here. You can see, if I zoom out, the white indicates every time we've broken under the 20-week moving average. I did some measurements over here. That's all the writing we're looking at. But so we got 1, 2, 3, 4, 5. And this is the longest we've ever been under the 20-week moving average. But like that whole 12-hour Bollinger Band I was talking about earlier, that happens. It just does. So it is what it is. I'm also going to have a Telegram channel here, link in the description below, so you can click on that and join me on Telegram. And I know that the alerts and stuff don't always come out on YouTube. I don't know what the hell's going on with them, but that's a whole different story. You'll get my alerts there to stuff that's going on in the market right away, and then you can click on it and it'll launch YouTube for you anyway. So that's another possibility if you want to stay on top of it, because I know that there's a lot of panic out there, and there's a lot of complete bullshit that people are talking that makes no sense whatsoever. It's all hype. I mean, the number of times that I see people on their thumbnails with these faces that make it look like, oh my God, it's going to be the greatest thing and huge bull move and you won't believe this, man. Like, it's so misleading. And for the average retail investor out there that doesn't know how to look at the charts, and you make a move based on one of these YouTubers that's basically just trying to clickbait you into giving them, you know, some pennies from YouTube for watching their video, it's disheartening to believe that they'd be that disingenuous for a couple of bucks. I suppose it's not all that shocking, but it's disheartening. So if you want the real story, if you want to hear what the charts are telling you, you can come here, take a listen, and then make a decision from there. You can add, do your own research. Like I said, you can add the news releases and the latest information coming from the Fed, and what Elon tweeted, or whatever it is you want to look at, and then combine all that together and make that educated decision. What's best for you, your investment portfolio, your family, and so on and so forth. So I hope you enjoyed this video. I hope it was very informative. This is way fucking longer than any of the videos I'm going to be doing in the future. I'm thinking about having a daddy-daughter dollar series where I teach my daughter how to do this, because she's very interested. She's 15 years old, but I'm going to teach her how to do it. And in teaching her on the screens here, you guys can learn along with us. So if that sounds like something that's interesting to you, please just leave a comment. I'm probably going to start it anyway, because I'm a new channel. I don't have a single subscriber at the time of recording this, because this is my first video. There isn't even a single video up there for anybody to subscribe to. So I'm going to do it anyway, and then I'll see how the feedback goes. But if you guys could let me know that sounds awesome, and that's how I would like to learn, and there'll obviously be some banter between me and my kid and so on, and she's pretty fun. But in most of it is going to be popping on 5 minutes. You might see one from my phone, a quick recording from there just to say, everybody calm down. It's not what it seems like, and so on. Because you enter in a short, for instance, and you're on leverage and you don't want to get liquidated and you're freaking out because all of a sudden it spiked up and you weren't ready for it. And what should I do? Do I sell? Well, I'm going to post all that on there. But again, do I sell is a question you have to answer, because this is not financial advice and I'm not a financial advisor. You get what I'm throwing down. All right, thanks guys for watching. More to come. I'm gonna try to get these things out daily. If they're only 5 minutes long, not a whole lot of production is going to be going into this shit. So, but it'll answer your questions and you can learn a thing or two. So thank you again. Have a good one.